Hi everyone, Piers Bolger here, the Chief Investment Officer at Viridian Financial Group. Well, as you know, we've been working very closely with Jason, Brian and Nella and the rest of the team at Carrington's in terms of delivering portfolio-based solutions to the Carrington's client base. And we thought it'd be worthwhile just on reflection, just having a look at the performance of financial markets over the last 12-month period, as well as also being mindful of the performance of financial markets over the medium to longer term, because when we put together portfolio solutions, clearly we're focusing on what's happening here and now, but equally and probably I think more importantly, you always have got one eye to the future and you're building a portfolio solution in order to deliver over that medium to long term. I've just got a couple of slides just to highlight these points. And the first slide here is just showing the performance of the local equity market over the financial year ending June 30 this year. And you can see over the 12-month period, the market was down roughly around about 7%, so a negative return for this financial year, the first time in a couple of years that we've seen that. But right across the board, most sectors were also down quite considerably. Energy being one, obviously the oil price fell considerably. We saw the financial sector, banks particularly, also a lot weaker over the course of 2020. Notwithstanding that, there were a couple of bright points in the market. We saw the IT technology sector, the demand for cloud-based solutions rose as more people were moving to online in order to work or to shop. Consumer staples were certainly stronger over the period as we saw a spike in sales, particularly in regards to supermarkets and the like. And healthcare, again, we saw some really strong performance out of that part of the market. The demand for healthcare services obviously has increased through the course of 2020 with the COVID lockdown. But notwithstanding that, the overall market performance was clearly negative and challenging in the context of not only domestic returns, but equally on a global basis. But when we think about that in the context of portfolios, as I was saying earlier, we thought it was really important just to balance what we've seen, as I said, over the last 6 to 12 months. But equally, when we're thinking about that in the context over, the medium to longer term. And this second chart here is just showing the performance not only of domestic markets in terms of returns, but equally global markets over the 3, 5 and 10-year period. And when we think about building portfolio solutions, we think it's really important to take into consideration the performance expectations of those particular, certainly growth asset classes over that medium to longer term, because it really does start to balance out the risks associated with investing in asset classes such as equities over a shorter time frame. And you can see there that, by and large, when you're looking at those charts there, you can see over that 10-year period, all asset classes delivered a positive return. The defensive asset classes you can see highlighted on the left, by and large give a return profile that's actually quite constrained. You see very little variability in the performance of those asset classes over that period, and that's to be expected. Cash and fixed income defensive asset classes are providing that balance to portfolios in difficult market environments, and they've done exactly that through the period of 2020. And then as you move to the right, you start to see greater exposure to growth asset classes, whether it be property, equities, infrastructure and the like. You can see there that they're having a more variable performance period, certainly over the shorter term, and property is a really good example in that context. But when you start to look over a 5 and 10-year period, the performance of those asset classes really starts to come into its own. And from our perspective, that's really important when thinking about building out a portfolio framework, because you need to have balance in your portfolio. You need to have exposure to defensive assets to provide that dampener and that buffer in difficult market environments, as well as having exposure to growth assets such as equities for the longer term growth that you need in order to build out that wealth creation through time. And the final one there, just on that far right hand side, is just the performance of the Australian dollar. And we think it's really important when you're looking to invest in offshore assets, you need to have a focus on the Aussie dollar. You need to be mindful of positioning accordingly. And you can see there the Australian dollar has declined roughly around about 10% against the US dollar over that sort of 10-year period. So, from our perspective, when thinking about that, as I said, it's important to note the impact that currency can have on investment returns. And as I said, it's something that we focus on when looking to invest in offshore markets. But the key point we would say in regards to this chart relative to the first chart is that you always need to have one eye to the future. And from our perspective, despite a lot of the challenges that we've seen through 2020 and we expect to continue to see as the global economy recovers, as financial markets recover from the worst of COVID. Hopefully we start to see that really start to play out through 2021. It really is important to have that balance across varying asset classes at varying percentages across your portfolio, and always remain cognizant of, is that portfolio delivering to your needs, and then have that conversation, as I said, with the team at Carrington's. We're heading into the domestic reporting season at the moment, and we'll look forward to giving a bit of an update on that in terms of what we're hearing from companies, and as I said, how we're positioning portfolios into September quarter and to the back end of the year. As always, look forward to catching up again soon, and bye for now.